Bitcoin has plummeted below a critical support level, sending shockwaves through the entire cryptocurrency market. With Ethereum also showing signs of weakness, the implications could be vast. Here's a comprehensive breakdown of today's turmoil in digital currencies. On July 29, 2026, Bitcoin experienced a significant breakdown, falling to $63,854, marking a loss of 1.42% over the previous day. This decline broke the recent higher-low structure that had provided some bullish hope for the cryptocurrency. By approximately 10 a.m. GMT, Bitcoin's market dominance showed signs of waning as investors began to shift their focus towards alternative cryptocurrencies. Ethereum, currently priced at $1,016, has not yet confirmed a complete structural breakdown, but momentum indicators indicate a bearish warning. The downward trend has put the entire crypto market on alert, as Bitcoin's failure to hold key support levels raises concerns about the broader market's health. This situation is exacerbated by a backdrop of increased selling pressure, as recent reports suggest that Bitcoin's dominance is declining amid a climate of uncertainty. Investors are reportedly reacting to a confluence of factors, including regulatory scrutiny and macroeconomic pressures, which have created a risk-averse environment. Regulatory bodies worldwide have been tightening their grip on cryptocurrencies, leading to fears of potential crackdowns that could stifle growth. What makes this event particularly shocking is the speed at which Bitcoin's position eroded, especially as it was previously showing resilience. Unlike past corrections, which were often met with immediate buying pressure, this time the market appears more cautious, indicating a significant shift in investor sentiment compared to earlier events. The implications of this downturn are profound. Market analysts warn that if Bitcoin continues to falter, it could lead to a broader sell-off across the cryptocurrency ecosystem, negatively impacting smaller coins that typically follow Bitcoin's lead. This trend could potentially stifle innovation and investment in blockchain technology as confidence wanes. Additionally, institutional investors who have recently entered the market may reevaluate their positions, further complicating recovery efforts. Looking ahead, traders and investors will be closely monitoring Bitcoin's price action to identify potential support levels. A failure to reclaim previous highs could signal a more prolonged bearish phase. As alternative cryptocurrencies gain traction, the dynamics of the market may shift, leading to a new era in digital assets. The upcoming weeks will be pivotal in determining whether Bitcoin can regain its footing or if the cryptocurrency landscape will undergo a significant transformation. Bitcoin's recent breakdown has sent shockwaves through the cryptocurrency market, resulting in a significant downturn across various digital assets. As the largest and most influential cryptocurrency, Bitcoin's performance often dictates the trends within the entire sector. Its decline has triggered a cascade of selling pressure on altcoins, including Ethereum, which has seen its value plummet alongside Bitcoin. This decline has prompted a noticeable shift in investor behavior, with many retail investors choosing to liquidate their holdings in an attempt to minimize losses. Consequently, the market capitalization of cryptocurrencies has rapidly diminished, reflecting the growing panic among investors. The context surrounding this downturn is rooted in a combination of factors, including rising interest rates, regulatory uncertainties, and macroeconomic pressures. Over the past few months, central banks around the world have signaled a tightening of monetary policy, which can diminish the appeal of riskier assets like cryptocurrencies. In particular, the Federal Reserve's recent decisions have raised concerns about liquidity in the market. Furthermore, recent regulatory developments have created an atmosphere of uncertainty, making investors wary of potential restrictions that could further impact the market. High-profile crackdowns in various countries have raised questions about the future of cryptocurrency trading and investment. The impact of this downturn extends beyond individual investors. Businesses that have embraced cryptocurrencies as a means of payment or investment may find themselves facing financial challenges, which could lead to layoffs or reduced employee compensation. Moreover, companies heavily invested in cryptocurrencies may face significant losses on their balance sheets, potentially affecting their stock prices and overall market confidence. Additionally, the broader economy could experience repercussions as consumer confidence tends to wane during periods of financial instability. The potential for increased regulatory scrutiny looms large as governments and financial institutions reassess the implications of such volatility, which could lead to stricter regulations in the future. Looking ahead, the cryptocurrency market faces a critical juncture. While some analysts argue that this downturn may present a buying opportunity for long-term investors, others caution that the volatility may persist as sentiment remains fragile. The future trajectory of Bitcoin and the broader cryptocurrency market will largely depend on external economic factors, investor sentiment, and the regulatory landscape. Stakeholders must remain vigilant and adaptive to navigate the evolving dynamics of this complex market, particularly as central banks adjust their strategies in response to inflation pressures. The events leading up to today's crisis can be traced back through a series of market dynamics that have unfolded over recent months. In early July 2026, Bitcoin was trading robustly, with prices hovering around $64,000, buoyed by bullish sentiment and increased institutional interest. However, as the month progressed, investor sentiment began to shift due to macroeconomic pressures, including tightening financial conditions and rising regulatory concerns. A particularly significant factor was the report from Root Data, which highlighted that 99 cryptocurrency projects failed in 2026, signaling a tightening venture funding environment. This alarming statistic raised red flags among investors, fostering an atmosphere of caution and skepticism. Furthermore, Bitcoin whales, large holders of Bitcoin, began moving significant amounts of their holdings, indicating a potential lack of confidence in the market's stability. Historical precedents, such as the significant corrections seen in 2018 and 2020, provide a cautionary tale. Both periods were characterized by rapid price declines following market euphoria. The motivations behind these historical movements often stemmed from speculative trading and regulatory crackdowns, which can further destabilize the market. The current confluence of these negative factors set the stage for today's breakdown, as investors now reconsider their strategies in this uncertain landscape. The impact of this crisis extends beyond individual portfolios. It threatens to undermine broader confidence in the cryptocurrency ecosystem, potentially leading to a prolonged downturn. As regulatory scrutiny intensifies, it remains to be seen whether the market can recover or if further declines are imminent. Looking ahead, market participants will need to adapt to this evolving environment, potentially seeking safer investments or diversifying their portfolios to mitigate risk amid ongoing volatility. Investors must remain vigilant as they navigate the complexities of this changing landscape. Looking ahead, the cryptocurrency market faces several potential scenarios that could unfold in the coming days and weeks. Recently, Bitcoin experienced a notable price drop, raising concerns among investors about its future trajectory. This downturn has elicited reactions from both seasoned traders and newcomers alike who are closely monitoring market dynamics. A further decline in Bitcoin's price could test critical support levels around $60,000, a psychological benchmark that has historically influenced market sentiment. Investors will be watching intently to see if buyers step in at these levels or if further selling pressure prevails, potentially leading to a more significant downturn. The backdrop to this volatility includes ongoing economic uncertainties and macroeconomic factors, such as fluctuating inflation rates and interest rate adjustments by central banks. These elements have historically impacted risk assets, including cryptocurrencies, which are often seen as high-risk investments. Another scenario involves a consolidation phase where Bitcoin could stabilize and potentially rebound. However, this would require strong buying interest and positive market sentiment, contingent on external factors, including regulatory developments. Experts suggest that favorable regulations, particularly regarding decentralized finance, DeFi, and non-fungible tokens, NFTs, could restore confidence in the market. Conversely, if regulatory scrutiny intensifies, it could exacerbate the current downturn, further discouraging investment. The recent proposals for stricter regulations in several jurisdictions have raised alarms among traders, prompting many to reassess their positions. In the immediate future, traders and investors should monitor key technical indicators and market sentiment for signs of recovery or further deterioration. As we navigate this turbulent landscape, the outcome of upcoming regulatory discussions will significantly shape the future of cryptocurrencies, with a balanced regulatory approach potentially paving the way for a more stable and innovative market environment. As we consider the potential outcomes, how do you think the cryptocurrency market will react in the days ahead? Share your predictions in the comments, and don't forget to subscribe for daily deep dives into critical financial news.